Good afternoon, everyone, and welcome to the first session of the 15th edition of the Brazil-Canada Chamber of Commerce Traditional Doing Business in Brazil event. I am Carolina Alberna, CEO of the Brazil-Canada Chamber of Commerce in Toronto, and will be your MC here today. Just a few housekeeping rules. The panel will be answering questions during the presentations, and all questions should be asked through the Q&A box located in the bottom of your screen. We will do our best to address all points raised during the presentation, so don't be shy. As I heard before, the only bad questions is the one that I have not been asked. So please feel free to add all your comments into the Q&A session, the Q&A box. First, for those who are not familiar with the BCCC, we are a membership-based association that supports its members through information, networking, and advocacy. And for nearly 50 years, we've been building relationships between Brazil and Canada, strengthening bilateral relationship in investment, trade, best practices, and mutual growth and prosperity. Our relationships are public and private, featuring managing directors and decision makers from companies and institutions of all sizes. And our volunteer board of directors is comprised by members with expertise, knowledge, and connections that can only be found by being active members of the Brazil-Canada market. We support our members, as mentioned, through advocacy, insights, and connectivity. So if you're interested in learning more about the BCCC and how we can support your company, please feel free to reach out to me anytime. We have a packed agenda for today. So without further ado, I'd like to invite Paola Saad, President at Mandala Group and Chair of the BCCC Trade and Investment Committee, to say a few words during the opening remarks. Paola, mic is yours.
Thank you very much, Carolina. Thank you very much, everyone, for attending. Big welcome. Well, we are in our 15th edition. Our little baby's growing up, I guess. And doing business in Brazil, it's an interesting event because it's new, but it's the same. We're going to have it every year, but we're always looking at the new trends, such as diversity in the past, ESG. This year, we're looking into our SMEs and how we can help those companies get to Brazil. But of course, we have our political and economic outlook, which is always a wonderful panel, and Prahal will be heading that one. And well, I just have a word of thank you, first of all, to our partners, especially, Ambassador Bora that's here, the embassy in Ottawa, also the Canadian Consulate and embassy in Brazil has been so supportive of all our activities, as well as all the associations that we deal with. And also Carolina, our CEO, and her team for putting together this wonderful event. And well, I'm looking forward to see what's the next few days are gonna come. And thank you so much for being here.
Thank you, Paola, for your words. I would like to invite now Ambassador Pedro Borio to join us and say a few words for the welcoming remark. Ambassador, mic is yours.
Good afternoon, boa tarde, bonjour à tous. In the classic Canadian mode of saluting all of you, it's a great pleasure for me to be here in this event. And I know very well it's not a small thing to reach the 15th iteration of this event. This is a source for us of great pride that you have reached this landmark, and especially in this context that we are finally leaving behind us the worst of the pandemic. The Chamber, as well as our Canadian partners and our Brazilian partners here in Canada, the consulates, the consulate, honorary consulate, the Canadian embassy in Brazil, my dear friend Jennifer May. I'm very, very happy that you managed to get this far again, and even happier when I see the level of the participants that you secured for this session. It's very timely to have a very frank and productive exchange about the calendar and the prospects in Brazil, because the election year is a peculiar year. There are restrictions, there are legal issues that start slowing down the movements of ministers and other authorities that normally we would see coming back to Canada after the pandemic restrictions. So I have been stressing that there is a particular window of opportunity to work before the focus shifts totally to the election process, which is, and then you have a second moment in the second half of the year, next year, when naturally the attentions in Brazil will be sort of monopolized by the elections. But let us do all that we can to keep things moving until then as fast as possible. And even during the elections, a lot can be done. Until then, I would say, as I mentioned before, we have a window of opportunity to try to push hard. We are very happy that the trade and investments kept flowing and growing at very impressive numbers and very remarkable operations that happened during this period. And even today, we start this meeting under the just breaking news of the CPPB Votorantim New Deal, which is, I think, has a significance that goes wider than the deal itself. It reflects the very intense level of energy that we are witnessing with Canada, and that we are proud to some extent have contributed to keep happening despite the severe restrictions. I am very pleased to see also that you secured to have a keynote speaker of the highest level, the Deputy Minister Carlos Alexandre Jorge da Costa. I encourage all the participants to use his participation to the maximum extent. He has been in the core of the economic team of Brazil for a long time. He has long credentials that go way beyond his experience as Minister of Economy with BNDES, a doctorate in the United States. So I'm sure it's going to be a very productive session. On our part, I see that Carolina adhered to my always repeated mantra of the importance of asking every possible question, and I would just like to finish by encouraging you to keep in touch with us, reach out to us, and by us I mean also the consulates in Vancouver, Toronto, Montreal, consulate, honorary consulate in Manitoba that's going to be participating, and we'll be happy to follow up on anything of interest that might come up. Thank you very, very much. A very successful session for everybody, and I'll leave you with Dr. Carlos Alexandre da Costa.
Well, good afternoon, everybody. It's a great pleasure to be here. I'd like to congratulate all the entrepreneurs, investors, Brazilians, Canadians, citizens from the world who are watching this seminar. In particular, I'd like to congratulate Ms. Paola Saad, President of Mandala Group, Mr. Peter Hall, Chief Economist and VP at Export Development Canada, Thiago and Lucas de Aragao, my friends who have been doing a fantastic job at Arko Advice. I see here that Mr. Otaviano Canuto is also president, John Welch, and it's really a pleasure to be here sharing with you a little bit of what we have been doing since the beginning of this government to transform our country in a much better place to do business and hence create jobs. This is the vision that we have shared since the elections. We believe that freedom to do business, freedom to open companies, freedom to grow, freedom to create employments is the solution for prosperity. And this is exactly what we have been doing. This is our plan. So I'd like to share with you a presentation that we have prepared to guide this view that I'm mentioning to you. Let me just share here the presentation. If somebody's
yes, we can see it.
Okay, it's what we call transformation under the radar, because most of what I'm going to show you is not in the headlines of traditional media or even in some reports on our country. The main diagnosis of what we have been doing is what we see at this graph here. Brazil until the 70s was growing and was not, it was growing based upon an increase in our productivity, which is the only way we can grow in a sustainable way. Most of this growth was the result of some reforms that have been undertaken in the middle of the 60s, around 65, 66, when we had a fantastic economic team with Roberto Campos, with Mario Henrique Simonsen, and several other economists who share the view that we have at this government here. They opened the economy, they created a much better business environment, and that resulted in a lot of investment and productivity growth in the next decades. Until the 80s, and then we faced several decades of stagnation in which our GDP per worker stagnated in real terms, and as a percentage of the US GDP per worker, we decreased from 40% to around 25%. In other words, in the beginning of this government, we needed 4 Brazilian workers to produce, on average, what an American worker produced. And this is a tragedy because we missed most of the opportunity of the fantastic global growth that we faced in several decades. So to overcome this, we have a plan. First of all, we need fiscal stability. This is a prerequisite for everything. So we implemented some reforms to control the payroll payments of the government, which for the first time has been decreasing in the last years. We restructured the pensions system in Brazil, which was the major source of expenditures, and that resulted in a contraction of government expenditures. Of course, the pandemic came, and that changed the short-term data, but we are back on track, and we are reducing the debt to GDP ratio, which is the most important data to demonstrate the soundness of our fiscal side. And then we started to implement several measures to improve the business environment, regulatory reforms, and market reforms. That brings investment and also a strong support to startups and small and medium enterprises is what resulted in growth and employment. There is a couple of data here which are remarkable. In only 3 months this year, from May through July, 1.4 million small businesses have been created in Brazil. This is a world record. I'll repeat this data because it is really remarkable. 1.4 million small businesses have opened, formal businesses have opened in Brazil in 3 months. 7.1 million jobs have been created in Brazil, both formal and informal, in the first months of this year, and most of them in small businesses. When we look at what we have done in these 3 years, we implemented several reforms. The credit bureau's laws, a new regulatory agencies framework, social security, telecom, changes in FGTS, a compulsory savings mechanism, and several others which have already transformed the business environment in our country. Let me just, and there's a lot that is coming here. The new cabotage law is in the final part in Congress. The new concessions and PPP laws, bankruptcy law for micro and small businesses, a law for microcredit, more competition in the fuel sector, a better framework for land ownership, and so on. I'm not going into details because we would need a whole day to go deeper into each one of these. But let me just tell you what the results of these measures are in some world rankings. The first of them, which unfortunately has been discontinued, is the doing business that was calculated by the World Bank. In the beginning of this government, we were in the unfortunately position of number 124 in the world, which is a shame for a country that is a market economy, or supposedly was a market economy based upon private investment. And then we started to implement these measures, and we didn't have the ranking finalized because of all the problems in the World Bank, but we have a proxy for it because we know the details of the methodology, and we estimated the improvement in what we would be in the ranking, supposing that all the other countries improved at the same rate that they were improving in the previous years. So with the economic freedom law and other measures in 2019, we would have increased from 5 to 15 positions. And then with the bankruptcy law, 5 other positions. With the law of business environment, what we call the doing business omnibus, using a traditional term that is usual in other countries, 20 more positions. So right now we would be around the number 90, that's 34 positions in 2 years. And then with the integrated urban licensing, something that has already been enacted, but is being implemented in municipalities, 9 more positions. Credit registration, tax reform, and further foreign trade measures, more 27 positions. In other infralegal measures, 5 further positions. That would take us to number 49. And this is a dramatic positive improvement that certainly results in a strong growth in GDP. There are several papers which relate the doing business rankings and sub-indicators to growth. And by growing more than 70 positions in 4 years, that should result in a fantastic growth in productivity. And this is exactly what we are seeing now, but this is not yet incorporated in most of the market models that forecast GDP. And why is that? Because they are based in the econometric appraisal of what happened in Brazil in the last 40 years, where most of the growth, which wasn't growth, it was mostly business cycle fluctuations, was related to macroeconomic variables, not to productivity increases. So Brazil is facing this fantastic improvement in business environment. When we look at the cycle of the doing business, we have actual improvements which are very impressive. For instance, we have decreased a lot what takes to open a business, to get a location, to access finance, and so on. Also, there is another ranking which is very important, the Product Market Regulation Index, which is calculated by the OECD, which measures the quality of the regulatory environment of a country. And Brazil was number 3 from bottom up. We were only better than Argentina and Indonesia. So in this index, the higher, the worse is the quality of regulation. And it's 1,024 criteria. And we measure and we follow up on each one of them. And all the measures that we have implemented would have already taken Brazil right now to an index of 1.84. That takes us to number 39 from 47. And all the measures that are already being implemented and being approved in Congress, and also infralegal, would take us to the average of OECD by the end of next year. This is a fantastic improvement. And it's not something that is subjective. Most of the PMR is very objective and can be identified in the legal and infralegal framework, and we are changing that. And all the new regulatory reforms are creating a fantastic place to invest. For instance, in sanitation. We forecast $135 billion in private investment with the new regulatory framework. The telecom law that we approved in the first year, only for 5G, $31 billion in investment, and at least that amount for in 4G and even 3G that is not yet universal in Brazil. We have the railways law, that only in the first month attracted $20 billion in new projects. The integrated urban licensing, which is generating a boom in the construction, civil construction in all the country, new concessions designs, and also we are negotiating, and the final part of negotiating the cabotage law, the PPP law, and the electricity law that will also bring billions of dollars in investments, private investments for our infrastructure. There are several others which are also have already been implemented. For instance, we have liberated prices of OTC drugs, and we are on track to liberate furthermore the pharmaceutical market, and several others that are creating a much better economic environment in our country. And to finalize, we are supporting startups. We have a new regulatory framework for startups that is one of the best in the world. Brazil has been attracting billions of dollars for startups. Venture capital industry is booming in our country. Only in the first quarter of 2021, we had $5.2 billion invested in Brazilian startups, only in the first quarter. And that surpassed by 45% the total of 2020. And that is more than what has been invested in startups in the last 5 years. So, and that's the result of a better regulatory framework and also of several government programs to support startups. For instance, we have now the largest startup acceleration program in Latin America to be the largest in the world. We're also reindustrializing Brazil by reducing what we call the Brazil cost, which was calculated as around $290 billion on top of what it would cost for our productive sector to produce the same thing if we were in an average OECD country. The measures that we have already implemented have the potential to reduce $77 billion on year, the cost of doing business in Brazil. And the last chart to finalize my presentation, the most relevant potential of Brazil that we have figured out in the beginning of the government was with small businesses. Because the differential between the productivity of small business and large businesses in Brazil is the largest in the world. Our small businesses, on average, have 20% of the productivity of our large businesses. So if we reached the average of OECD, which is around 52%, in relation to the large businesses in Brazil, not the large businesses at the OECD, Brazil could grow during 10 years more than 5% a year only with the increase in the productivity of small businesses. And this is occurring now. For instance, we have been top 3 in the last 3 years in the increase of digital competitiveness, which affects small businesses. We are investing a lot in more credit for small businesses. We have implemented a system of advocacy to make sure that small businesses have all the support to do business according to the small businesses law, which guarantees to them much less red tape than large businesses. The boom in credit with more than $30 billion in new loans in government programs, and also the largest program in the world of management capabilities, which reaches more than 2 million businesses in Brazil to increase in practice their productivity. A sample of the companies that have gone through this process indicates that their productivity has increased 52% in less than 6 months by increasing management capabilities. So it's a whole set of transformation programs that we are having in Brazil that we have already implemented. There are some that still are on track to be implemented during this government that creates a much better country to do business. And this is why we're so confident that not only Brazil will grow more than 5% this year, and that is more than what we have lost last year In other words, in these 2 years with the pandemic, Brazil is growing, but also will keep on growing in the following years. And all that with the same concept that prosperity comes from a better business environment and more freedom to do business. Thank you.
Thank you, Deputy Minister, for your presentation. It's a pleasure to have you here with us today. And it's very interesting, some of the topics that you mentioned, especially about the growth of the amount of new small business that have been created, and as well like the overall innovation ecosystem in Brazil. These are topics that we will go a little bit deeper tomorrow to show the audience exactly what's going on and the amount of investment that's going to Brazilian startups and the opportunities that exist in Brazil for Canadian SMEs and for Canadian technology companies. So thank you very much for being here today. It's a pleasure and an honor to have you here sharing your knowledge and all the amazing work that the ministry is doing in Brazil with our audience. So thank you very much. Without further ado, then I would like to invite our other panelists as well to start the discussion on economic and political outlook. So I'd like to invite Peter Hall, Vice President and Chief Economist at Export Development Canada, to join us here today, as well as John Welch, Executive Director of the Brazilian American Chamber of Commerce and honorary member of the Board of Directors at the Brazil-Canada Chamber of Commerce. We have here with us as well Thiago de Aragao, Director of Strategy at Arko Advice, and Otaviano Canuto, Senior Fellow at the Policy Center for the New South and former Vice President of the World Bank, and a long friend of the Chamber, to have a friendly conversation on what to expect in the political economical outlook. Thank you very much. Peter, Thiago, John, I know that, I don't know, where is John? Is he here? Yeah. I know that you also know Deputy Minister, if so thank you all for being here today.
Carolina, thank you very much for that warm introduction, and congratulations on the 15th year. I didn't realize that this was 15 years strong. Everybody is impressed by a number like that because life is only so long, and that's a very, very impressive record. So, so thank you for the honor of chairing this panel today. And Deputy Minister Costa, I want to congratulate you on your presentation, a very compelling presentation, and that perhaps indicates to all of us why it is that there is intensive investment from Canadian pension funds and other institutional investors into the marketplace at the moment. I think, as everybody knows around the table, there is such a deep Canadian investment community knowledge of the Brazilian marketplace. And dare I say that, you know, when certain of the Canadian institutional investors actually make a move in the marketplace, everybody pays attention to that because of that deep knowledge. So that's a very impressive presentation, and congratulations to the Finance Ministry and others for the great inroads that you have made into rising in the rankings here. I'm going to very quickly pass this on to John Welch to kick us off with a short presentation, giving us the numbers on what is happening in the Brazilian economy, and then we're going to come back and we're going to have a rousing roundtable discussion between the four of us here. And I also want to encourage all who are observing today, or who are participating in this rather, to actively participate in the chat function as well. Anyway, we very warmly encourage everybody to participate in the question and answer period. It is for you, and we want to encourage that in the gentlest strong terms that we possibly can. So, John, I'm going to pass it over to you. Why don't you kick us off with your remarks, and then we'll get into the discussion.
Thank you very much, Peter, and thank you to the Brazilian Canadian Chamber to have me back again, although I'm no longer living in Canada. I know one person in my family wants us to move back right away, and that's my daughter. She still thinks she's Canadian, but that's the third. It'll be the third prong. She's American Brazilian, but anyway. And also, it's really a pleasure to be on the panel with these esteemed speakers, Otaviano, Thiago, and Peter, as yourself, I had a lot of interaction with the EDC when I was in Canada, and still do. I'm John Welch, the executive director of the Brazilian American Chamber of Commerce in New York. We do a lot of stuff together with the Canadian Chamber. We are very complementary, as Peter mentioned. Their main members are pension funds and real side, like miners and things like that. Most of ours are lawyers and bankers, so we do a lot of stuff in common. And it is a pleasure to be here. So I'm going to share my screen. And I think Dr. Costa's great presentation is a good segue, because he said it's under the radar. There's other things going under the radar just because the discourse in newspapers, both in Brazil and internationally, is focusing on other stuff. And what I'm going to do is present data, and I'll let you come to your own conclusions about what they mean. I will not say anything normative. I'm going to try not to. I'm not going to tell the Brazilians what they should do. But I think there's a lot of discussion that I hear, even on Wall Street, analysts that should know better, that really means they're not looking at the data. So let's look at the data. And the data tells me that, and maybe hopefully you'll agree. First, Brazil is in good shape, not completely good shape, but really the COVID-19 situation is much better under control than right now. And I'll show you those data. Everything is in the decline, new infections, deaths, and also excess mortality, which is probably the best way to measure things, just because it's very hard to categorize the cause, as we found out with Colin Powell's recent passing, unfortunate passing in the United States. And also Brazil's vaccination rate. Brazil's a very good country for vaccinations. They're at 73% now, and I'll show you that. And you can see relative to the world, Brazil is really, and Canada started out behind as well and just surpassed everybody. So two very good examples, Canada and Brazil, in terms of the vaccination. We've kind of stagnated here in the United States. I don't really have a good explanation why, but we've stagnated. Still, the vaccination rate is quite high, and things are looking better on that front. Growth is recovering quickly. Maybe on the margins looking a little bit less so, but when you're growing 12, 13% year over year, 4% doesn't look all that great, but it's actually a pretty good rate. And there's certainly discussion here in the United States and in Brazil and everywhere else. They're V's. They were V's. We've lived through enough of these external shocks in Brazil to know that if your banking system's in good shape and once things calm down, you'll come back very quickly. And that's what we've seen for sure. Inflation has accelerated, and it is a concern for sure, but it's mostly off the weakening of the currency and the large increase in commodities prices, food prices, for example. Brazil is a big importer of commodities as well. If we look at the non-tradable goods and services inflation, the rates are much lower. They're still high, but in the old days, when we had a big surge in inflation, let's say in 2015, 16, you had non-tradable goods inflation at 8-9% year on year. And then all it took, and the external sector was keeping, because the real was strong, keeping inflation down. And now that's not the case. It's the opposite. And that means that you have a very weak exchange rate in inflation adjusted terms, and something we haven't seen. And a lot of economists are puzzling over this. I'll leave this to Otaviano. I know Alfonso Celso Pastore has thought about it as well. He has a little different reasoning than I do, but we'll look at that. Because of that, to me, that's the inflation the central bank has to look at more than any other measure of core, and they're tightening. And I think they're getting a lot of criticism, perhaps because they're not tightening fast enough, but I'm not all that worried. I think they're pretty much on schedule. That's my own opinion. I've said nothing normative, but that's normative. And the fiscal accounts, when you look at the numbers, they're really quite extraordinary, how well they've improved, much better than most forecasts. And the only thing I can think of here is that, and this may explain also the weak real exchange rate, that these fiscal rules, the fiscal responsibility law, ex post, didn't have ex ante teeth, but it certainly has had ex post teeth, bringing down a president. The spending cap and the golden rule have teeth, and that has given some credibility, although we hear all the time that fiscal policies arrive, but it doesn't look like that right now anyway. So let's start going to the numbers. First, COVID-19. So here's the daily cases, new daily cases, and the 7-day moving average through yesterday. And you can see it's a very strongly downward trend. I'm not going to go into the reasons why, but at least the testing or the verification of positive tests is going down. And it looks like, we're back to levels that we haven't seen since early 2020. We look at daily deaths, it's the same story. Things are coming down rather quickly, and there's still problems with reporting of deaths. What was the primal cause? A lot of people were categorized as passing away from COVID, even though there was other things that probably contributed more to their deaths. But the best way is this way, is comparing the death rates to the normal amount of death rates over, and this is called excess mortality. You can see Brazil has come down dramatically, almost on top. We've seen a little bit of an uptick in the United Kingdom and a little bit in the United States, and it's now at Brazil is at the United States level, and that's certainly the Delta variant, but we're way off the peaks that we saw earlier in this pandemic. Vaccinations. Okay, here's a really nice graph. It shows that Brazil is ahead of the United Kingdom, ahead of Germany, ahead of the United States, ahead of Turkey, Mexico, etc. They're only, Portugal, overtook Canada as the champion, and Canada is in very good shape. So we're talking about above 70%, and in some cases above 80%, and at least with one shot. The second shot for Brazil is catching up. It's still behind the United Kingdom, the United States, and others, but you're getting fully vaccinated people at a pretty good clip. And we look here at the absolute number of vaccinations. Brazil is in fourth place with 258 million vaccinations. So this is not small. This is not noteworthy. It is noteworthy. It's very much noteworthy. Okay, economic recovery. All I see are V's here. Now we have the upside down V because we come off these incredibly high growth rates of near 4% in industrial production, above 20% in services, above 20% in retail sales, and the economic activity index that the central bank puts out, which doesn't capture everything. It doesn't capture every industry all that much. But we'd expect this kind of behavior, and the average on 12 months is quite positive. And this was the GDP numbers up to the last quarter. Of course, it's going to die down a little bit. Again, it's sort of my expectation. This is a guess, so this is not anything normative. But it's going to settle down just under 4%. And if the reforms that Dr. Costa talked about continue, I think Brazil's natural growth rate. I'll let Otaviano opine on what the natural growth rate of Brazil long-term structural, but it's gone back up again from the late 2000 teens. And you can see here, I have a decomposition. I'm not going to go into how I do this between aggregate supply and aggregate demand shocks. Unlike the United States, demand did go negative, and now we're getting the full effects on a cumulative basis of the assistance on the fiscal side and on the monetary side that the government gave. And you can see, Brazil is dominated by supply shocks as always. In a massive negative supply shock, now they're coming back, and that really explains what's going on with output. We also had a huge terms of trade shock, similar to what happened after the recovery from the 2008 crisis. We're at the same level. The red line is the ratio of the price of exports to the ratio to the price of imports, which is the terms of trade. And the last time we had a really strong real was, this huge increase in the terms of trade. Why? Because export prices skyrocketed and import prices did not. And I blame that on fertilizer, because Brazil does import 40% of its imports are commodities. So just looking at commodity prices doesn't help you completely on that. But we have this massive increase in the terms of trade going on in Brazil. And that is a huge positive shock. What's almost impossible to explain in models of the real exchange rate, the inflation adjusted exchange rate, usually when the terms of trade increase, and I have this on an inverse axis, then the dollar goes down. That means the real gets stronger. This time we've got a complete bifurcation. So I think it may be a fiscal policy, because we have, I'll show you that in a moment. Others, like former central bank president Pastore, thinks it's because they haven't tightened enough. But I don't. We'll take a look at inflation and those things right now. So, but the balance of payments is in great shape. The red line is FDI. That's the only thing that hasn't recovered. But that also, we heard that reflected in the presentation And I do expect that. And that also is a function of you had a pretty large drop in investment demand in Brazil and import demand. We'll see those come back together. But the current account deficit, this is a deficit here, it's now in surplus. And flows, FDI portfolio flows are very positive. Now, maybe that's not a good thing, maybe it's unstable, but the balance of payments is in good shape, despite the fact that we have this very weak exchange rate, or it sort of goes against having a weak exchange rate. Inflation has risen. We have headline inflation above 10% for September. We have these other measures of core outside the target band. But the question is this something good to look at? Like I said, I like to look at non-tradable goods inflation and service inflation, because that's really what the central bank affects. You can see tradable goods inflation is about 13%, where you have about 5.5% on non-tradables, which is high for certainly the recent history. But go back here and look here. You had tradable goods inflation keeping inflation down, and these non-tradable goods inflation, which is my core, way above 8%, which led me to believe that there would have to be a tightening of monetary policy, and it ultimately happened. The other thing, the Selic is not a good barometer of the tightness of the central bank. Certainly back in these days, you thought maybe they'd raise the Selic almost to 14%, but the long-term rate that's charged by the state banks, especially the BNDES, was much lower. So I have been making this since I did my dissertation in the 80s, the average base rate. And you can see now the TLP, which used to be the TJLP, is above the Selic rate. So the average is above the Selic rate, and monetary conditions are tightening. As we see here, and I have this range of Taylor rules, which is a rule about monetary policy. Once you get in that range, you're neutral, but it depends on what you assume is the long run equilibrium rate. So certainly it's been tightening for sure. And then finally, if we look at monetary based growth, year on year, it's negative. So we have pretty tight monetary policy despite the criticisms. Fiscal accounts. The recuperation of the fiscal accounts has something to do with the Social Security reform, although the private sector, INSS, has gone back down again in terms of the primary deficit. But the primary deficit is back to where it was when this current economic team took over, which was an inheritance of the prior administration. And if they can keep to the straight and narrow, we're talking about primary surpluses before the end of 2022. And the nominal has come back partially because of low interest rates, but certainly because of the fiscal effort on the primary side. We'll see. I'll leave that to the others to opine on. That because of that, you pay off your debt, your interest with the primary is the fiscal deficit that doesn't count interest. The nominal is the one that counts interest. That's how you pay your debt off. And we had extraordinary forecasts for gross debt and net debt of way above 100%. I did my first projection on Brazil's debt to GDP back in 1984. And I've been doing this a long time. I never had it doing anything like that. It certainly has straightened out a little bit, and inflation is helping, as I'll show you in just one moment. Here's the other thing that's helping, the weakness of the real. Brazil has just about $370 billion in foreign exchange reserves. The government owes about $170 billion. That means every time the dollar goes up, the government's net debt goes down. And the government has a windfall that they can only realize if they sell reserves, which they're kind of doing now. But you can see that level of reserves is above the totality of Brazil's foreign debt, both private and public, if we don't count intercompany loans between multinationals. So the numbers aren't too bad. And I'm just going to leave some questions for the panelists and sit down and listen. Questions for the panelists. COVID has had similar effects on the economy as this trucker strike, the collapse of the Brumadinho and Mariana tailings dams, and the collapse in Argentina. And I think you can opine on whether that's a decent parallel to the one now. And we had a pretty good recovery once things were normalized. And there's a threat now of another trucker strike. How much more reform are we going to get? That's for Thiago and for Otaviano. Monetary policy is tightening. Do you think it's enough, or do you think it's too much? Brazil has finally achieved a persistent real depreciation, which I've never seen in my professional lifetime. I've never seen anything quite like this. Will the government continue to adhere to fiscal rules? Will Brazil return to better long-term growth? And what about the 2022 election? Thank you very much.
Well, thank you so much, John, for kicking us off. There's certainly a lot of grist for discussion inside of this presentation here. One of the I'm going to start off with a question for you, John, based on the presentation. The presentation by Dr. Da Costa makes a very compelling case for inbound investment, and you point out in your presentation that FDI is quite weak, and we're aware of that at the moment. Of course, COVID brings its form of sort of investment retrenchment that happens. There's a desire to conserve cash over the period of time. That's a global phenomenon, and certainly, if a particular market is perceived as being riskier than others, then it would suffer more effects. And we're all aware of the investment accelerator. It takes a while to come around and so forth. Maybe you could share with us a little bit more about what your prognosis is for foreign direct investment. I'm not trying to push you into the normative here, but just to look at past trends to see how things are going at the moment and how Brazil is situated with some of these fundamental indicators that you have shared with us. What would your thoughts be on that?
Yeah, I'll first make an economist comment, and then I'll make a comment based upon my discussions with our members. The first is that this is cyclical. That drop in FDI is cyclical. I don't see, you can see that the long-term investment rates, especially with what's going on under the radar, are very good. I mean, our members have talked very much, especially about the liberalization in the gas market. There's other things going on there politically that are very difficult because you had this very big increase in oil prices and gas prices, et cetera. So we'll see how the government handles those things, and I'll leave that to Thiago and Otaviano. But I do think I think the prospects for long-term FDI are very good in Brazil. And many of the things, even in the foreign exchange market, first, the independence of the central bank passed. That's very good. They've also finally and I know Otaviano worked on this when he was in government, trying to unify the different foreign exchange markets and also the money markets, CETIP and Selic. So all these things are going to make it easier to get in and to get out. We also have more projects to improve the minority shareholders protection, and also and probably the most important thing, Tarcísio de Freitas was around here, the Minister of Infrastructure, last week, and the concession contracts and the privatization conditions are much more amenable to investors. I know I spoke to a couple of pension funds that had investments in railroads in Brazil, and that's going to be a major focus, which it should be, because they're kind of hostage to the truckers. But they, in a couple of years ago, they changed the concessions laws on renewal, and they were not very good for investors. And we had quite a few Canadian investors not very happy about that. So all those things are there. The question is, how permanent are they? And I think because it's under the radar, and Brazil is very good, and not about not taking an about face on contracts in mid. They always honor the contracts that are extant. So I'm pretty positive about FDI, and certainly our members are as well. And I wonder how the audience feels too.
Sure. Well, we welcome the audience participation on their own thoughts on this, and we will get back to audience questions in a bit. Otaviano, I want to draw you into the conversation here, because very interesting that currently we've got a world economy that seems to be hitting up against capacity constraints. Of course, when we think about the Brazilian economy, one of the complaints that businesses going in there have made over the years is the infrastructure, and yet in Dr. Da Costa's presentation, there has been improvement on this front according to estimations of how this is going to be measured. So I'm just trying to put together John's perception of the investment, the outlook for the economy, juxtaposed against the capacity that is actually there. How easy is it for that investment that goes in to actually move around? And what are your thoughts on that? And that's, of course, a question that's very much about the potential of the economy that John had said maybe we should serve up to you. So here's your chance.
All right. Thanks, Peter. Thanks to the Chamber for having me here once more. I appreciated very much both the presentation by Deputy Minister Costa and my dear friend John Welch as well. And they are very much complementary in one strong sense, I would say. Let me start by making a testimony of appreciation for what the Deputy Minister Costa spoke about. For my 15 years, working either as a vice president at the World Bank and other times as a board member, being elected by a bunch of countries, including Brazil, but many others, I soon started to realize the relevance of what underlies or underlied the doing business project, because I've been long time convinced that the major problem faced by Brazil is a combination of a productivity anemia combined with an obesity of the public sector, and that has to do with a combination of a lousy business environment and lack of investments, insufficiency of investments in infrastructure, besides other aspects quite important like quality of education. So, and I can say that over time, over the 15 years, I always try to convey to my Brazilian colleagues the relevance of implementing the agenda towards improving the business environment in Brazil, because the lousy Brazilian environment, the starting point, was so bad and is still not good that it took a toll on productivity in Brazil. And it's an agenda difficult to implement in the sense that, each item of the doing business agenda or the business environment more broadly face interest groups who oppose change and so on. And everything that the Deputy Minister referred to, we can score, yes. It's a pity that because of the controversy on the Chinese ranking at a certain year, as well as Saudi Arabia, the whole thing has been dumped out. It's really a pity for those of us who appreciate it very much. But the fact of the matter is that we have, Deputy Minister referred to several steps that have been accomplished. There is so much to do because the starting point is very, very bad. For those of you who didn't know reasonably well, the Doing Business project was the following. You split the life of a company from entry, from beginning until the end sometime, and into 10 stages. And then we went to measure, the World Bank went to measure how is the picture of those stages of life of a company at the last time, 189 countries, ranging from what it takes to open a company, to close a company, how expensive, how difficult it is to solve contractual issues, how easy it is to access energy, to fire someone, to hire someone, how easy it is to trade abroad, and so on. And because those dimensions of as the name says, business environment is everything that happens in between the doors of the company, the gates of the fabric, or the gates of the farm, and the rest of the economy. And when things are not good in that regard, there is a toll that is paid by companies in terms of productivity, and therefore the country pays. So hopefully we will have the continuity and maybe the acceleration of the agenda outlined by Deputy Minister Costa. On the fantastic presentation by John, which is fact-based, as he said, let me make just 5 points, particularly trying to look beyond. Well, he presented clearly this, I wouldn't say puzzle, and is not specific to Brazil, but this time around, most emerging market economies or developing countries highly dependent on commodities have not faced what has happened in previous times. That is to say, whenever you have a positive commodity terms of trade shock, like it happened in Brazil this year. In the past, you had simultaneously an overvaluation or at least an appreciation of local currencies. That's what has not happened this time. And Brazil is not single in that group, but it has been especially tough in the Brazilian case. If you compare with Colombia or with other countries, the so-called decoupling between the country's currency and the terms of trade has been very high in the Brazilian case. And that's why the exchange rate has remained so at so devalued levels. Well, some guesses are that the capital inflows have not behaved as many expected. And it's true that as compared to other emerging market economies, Brazil has not had a revival of capital inflows as it was the case of others. This has to do probably with fiscal risks and or a perception of political risks abroad. The consequence of this decoupling has been inflation, higher inflation. Of course, if food prices are rising and you don't have a simultaneous evolution on the nominal exchange rate, you have an inflationary impact on the basket of food, and that touches on the poor particularly. And also we had the hydro crisis, the issue coming from the energy, the risks of rationing, I understand, are lower now, but the uptick on energy price has also contributed to the inflation. And this higher inflation has, we all know, helped a bit on the fiscal landscape. We know that the improvement, the unexpected great improvement in the fiscal balance in the beginning of this year had to do with the fact that you have different price indexes affecting revenues and expenditures. But all in all, we all can agree that as compared to our fiscal fears of last year, the picture is let's say less daunting or less of concern than we all felt it to be the case in the second half of last year. But still, I'd like to highlight that the fiscal risks remain there despite the quantitative improvement in 2021, and it will all hinge on how the government proceeds with the intended repeat of transfers, the reboost of the conditional cash transfers, how the specific format will matter a lot. There is an unknown, and nobody here has a perfect answer as to what extent the markets will be concerned with the whatever is made in that regard. But the risks are still there, and one should pay attention. A second point, broadly, that I'd like to make is that I also share with John the perspective that the inflation, it remains high. I share with John the idea that the pace of adjustment of the basic interest rate has been reasonable. There was no necessarily any need to step up the pace of 100 basis point increase by turn will be enough to put the basic interest rate, the SALIC, in the range of 9% by early 2022. And I do believe that the risks for 2022 are somewhat more balanced. I wouldn't be that much concerned with that regard. I also share, of course, is what the data shows. This time around, Brazil is not in a fragile position with respect to its external accounts, as it was the case back in 2013 when there was the first talk about the tapering and so on. And on the foreign front side, I do believe that things are reasonably well balanced and not a source of concern. What concerns me is the following: is the clear sign of a slowdown in the evolution of the economic activity. And we saw in August. Of course, the rebound this year reflected, as John aptly included in one of the slides, some base effects from the downfall last year. Those statistical carryover effects are gone, and at the margin, Brazil is back to where it was before the pandemic, which is facing the double disease that I mentioned at the beginning of my talk, the combination of anemic productivity increase and still the issue of fiscal public sector obesity, which is not completely solved. It's going to take some years before the spending cap being respected would give some slack for, let's say, for us to put behind definitely fiscal risks in the Brazilian economy. So we still have there. And at the margin, the point out of the picture that also doesn't make good when it comes to attraction of foreign investment is the political noise. We are in run-up to an election. Maybe Thiago will correct me in his views, but I don't see it as likely that we will go through significant reforms between now and the election. And given the prospects that we might have an election with all candidates promising, or let's say, letting the perception that the fiscal spending might be lost, that doesn't bode well in the immediate future. But to finalize, I would say that the good news is the clear perception now, which was not the case at least until mid of last decade, of the relevance of the business environment agenda. Also, a good news is the fact that we have given steps in making possible a higher degree of participation of the private sector in infrastructure investments. That's the case of sanitation. Maybe we're going to get something on the gas as well. But still, where we have the risks is on the tough performance of GDP next year, because don't be so much excited. It's not by chance that all growth forecasts for 2022 in Brazil are now ranging in between the most pessimistic figures, which point to 0.5% of growth next year, to others, the most optimistic talk about 1.5%. So the tough reality of the underlying low growth potential. John spoke about growth potential. The magic figure that has been used by everybody had been until recently 2% of growth potential for Brazil. But when one reckons already the effects of the demographic changes and other aspects, I would say that the growth potential has come down a bit closer to 1.5%. So the necessity is to proceed with the reform agenda, but unfortunately, I don't think politically it will be easy to expect major steps in that regard on that front between now and then elections next year. So fasten the belt, and there we go. Thank you.
Otaviano, thank you very much for your insightful comments. You're drawing on years of wisdom and analysis for the economy. We thank you very much for what it is that you shared with us. If I may, and I'm abusing my position as moderator here, one of the things that we need to keep our eyes on as well is that inflation typically, when we looked at markets like Brazil versus the rest of the world, was juxtaposed against a world where there was stable monetary policy and successful achievement of inflation targets. And that's a little bit out the window right now. And what we need to keep our eyes on is relative price increases in the rest of the world versus Brazil. And I think that we've got some surprises happening in the developed world at the moment. And that puts us in a different position of flux than we've been in before. But Thiago, I would like to bring you into the conversation here. So lots of information on the table about the difficulties that we have. And of course, any nation that is approaching an election goes into a bit of policy stasis. And that has been well demonstrated in John's remarks and in Otaviano's remarks. But the people around the table are looking not just towards the election, but beyond the election. When we're talking about investments, they're of a long-term nature. So perhaps your thoughts on what might happen between now and the election. But if I could ask you to cast beyond that and say, where is the reform agenda, regardless of who is actually grabbing the reins of power?
Right. On the two fronts associated with the double disease that I referred to, Brazil needs, hardly so, to lift investments in infrastructure. The pace of investments in infrastructure in Brazil has been so low that, according to the estimates of my ex-colleagues at the World Bank, Brazil has not invested in the last 3 decades even the barely minimum to maintain the precarious existing infrastructure. The latest estimates that I remember refer to something like Brazil needs to invest at least 3% of its GDP just to maintain the infrastructure. But the annual average over the last 30 years has been something between 2.5 and 2.8% of GDP. So that's an obvious place where if the country managed to lift up the investments, the positive impact in terms of productivity will be very significant. And obviously, the public sector will remain in a straitjacket for some time. So the key lies in finding ways to associate, to have both the public and the private sectors investing in infrastructure. And that assumes a series of reforms. The water the sanitation structural reform was quite important, but we have to go beyond in that regard. The other front is on the business environment, which also takes a substantial toll on the Brazilian companies, Brazilian operating. If the country keeps on, let's say, improving and making Brazil closer to what it is in the average of other countries, including emerging markets, the gains in terms of productivity would be significant to lift the growth potential. There is clarity that this is the agenda to go forward, regardless of who wins the election next year.
Thanks for those additional comments. So with that, I'll invite Thiago to add thoughts to those observations.
Well, thank you very much. It's a pleasure to be here talking with all of you. Look, we have to observe that the electoral period, which begins 9 months, 10 months before, depending on our country and depending on the situation, it brings in a very steep curve of narratives. The narratives that emerge during an electoral period are not the narratives that are executed during the non-electoral period. So this is one of the first things that an investor has to look, is not to take at face value everything that is said during an electoral period, because everything has a different target audience. And the target audience does not have the same interests or modus operandi as investors. The investors, they have to protect themselves in order not to be too scared or too over-optimistic by any type of narrative that emerges during an electoral period. Having said that, when we look at Brazil, it is very important to separate the zones in which action happens. So if we are able to, for example, make an analogy with a war planning environment or a military intelligence planning environment, we have to observe the actors, we have to observe the narratives and the topics, and we have to observe the locations or the battlegrounds. Those three things, they answer everything that we want to know depending on how deep we go. Of course, given the nature of politics, those things change through time. But when we look at the actors, they are somehow obvious. We have Bolsonaro, we have Paulo Guedes, we have Lula, we have the potential names that can emerge as Minister of Finance of Lula, etc. When we look at the topics, many of them were given by John, by Otaviano, by Carlos during the beginning of the conversation. And those topics, they vary from inflation, corruption, pandemic, investments, better environment for work, unemployment, etc. But the focus that I want to give here are the battlegrounds. And when we look at the battlegrounds, which are every dispute of narrative through the press, every dispute of power inside the executive, every legal dispute inside the judiciary, but ultimately every decision-making that happens inside the Congress. And it's inside the Congress that everything has to be observed with a more acute, keen eye. When we look at the Congress, we look at a very diluted Congress in which the alliances that are given to a particular president, they are alliances that are thematic. They're not alliances that are formed like we had in the past 20 years or 25 years, in which an allied base would support the president no matter what. Given the fact that they are thematic, we have to observe which issues the Congress is willing to move forward and which issues they are not willing to move forward. And one thing that we can sense right now is that the nature of Congress, despite its changes since 2017 until now, is in essence, a very reformist Congress, is a Congress that is willing to move forward with the reforms as long as they are active members of the decision-making process, not only the validation process. And sometimes this is the gap that the executive have suffered to understand for a long time. You cannot simply design a reform, whether it's tax reform, administrative reform, or whatever, and simply send it to Congress expecting the Congress to validate that. The construction of the reform has to be made in partnership with the key leaderships of the Congress. And this is how the alliances are being formed right now. The budget is not fully decided by the executive as it was in the past. So the amendments to the budget, that was the major instrument for a president to keep the Congress on their side, does not exist, because now the Congress have full authority to determine those things in relation to the Congress. So what does the Congress, in relation to the budget? So what does the Congress want? To be part of the decision-making in order to receive proposals in the legislative already very near what they want. This is what led, for example, figures like Ciro Nogueira becoming the Minister of the Civil House, instead of someone that simply occupied the position as a midfielder for the executive in the relationship with other ministries. So within this scenario, no matter who wins the next election, the logic of reaction and relationship with the Congress tends to be the same. A reformist Congress that will be part and want to be part of the decision-making process before it reaches the legislative, with a very strong center of power among the centrist parties, which are only unified as a matter of definition because they are not unified as decision-maker groups. Also, we will see the alliances and the support given by the Congress to the president based on issues, not based on support as a whole. And this is something that is very important for the investor to watch, because then the investor, he will look at other thermometers to look forward for what will change or not in the Brazilian government. It will be the thermometer of the decision makers inside the Congress. And if he is not willing to dive into the political intrinsicies, the investor, he will look at sectors such as real estate or energy issues or other areas in which the impact of federal level politics is lesser, the impact of the regulatory agencies is higher, therefore it's more predictable.
Well, that is a rich conversation. The question I guess I would pose in response to that is, there are other prominent Latin American economies where, one regime will come in and, of course, institute a bevy of reforms. And we've seen more recently how another regime can come in and undo those. And of course, that wreaks havoc with investors and turns a lot of them away. And it's a very simple question, but I suppose what would you see as being the likelihood of that actually happening in Brazil? I think you've made a very strong case for there being more stability along those lines. I just want to make sure that I heard that correctly. Want to ask you to address that, and then I'm going to ask Otaviano to address the same question.
Well, to undo things in Brazil is very hard. And we see that there are many things that remain from decades ago that it's very hard to undo them. Because everything that was done, whether it's good or bad, it benefits a specific group of individuals that have their strong participation in politics. The Workers' Party, let's say that they win the elections under Lula. Lula, he tends to be more pragmatic, as many people think. And there are many things that his party criticizes because it's part of the narrative to criticize, but they simply rebrand in order not to have to be able to undo it. And one example are the concessions. Instead of privatizing airports, which they were very, very eagerly against, they simply changed the narrative and the word and the branding to say airport concessions. And at the end of the day, did the same thing. Dilma Rousseff spoke many, many times about a tax reform, many times about the pension fund reform. But the thing is that it's part of their role to criticize as opposition, as it's part of any opposition, to undo those things that structurally changes Brazil for the positive and the obvious is something that economists, whether they're from the left or the right, they will recognize the structural benefits. So hardly they will undo structural changes. Conjectural changes are easier to be undone, but conjectural changes, they are not as impactful to investors as structural changes.
So that's why you counsel the investors to divide between those things, between the rhetoric and the substance of those conversations. Otaviano, very interested to hear in the context of your conversation about the difference that investment can make to overall productivity and therefore potential growth in the long term, or for Brazil, your thoughts really on the political process and the intertwining of that with respect to the carrying forward of reforms, particularly along the lines of improving doing business and infrastructure.
Perfect. You see, Peter, I agree with Thiago when it comes to the perception by all stakeholders in this process, even if the rhetoric during the election may not be very close to that, to some things that cannot be touched. By coincidence, I personally, let me give you a personal testimony. I am a non-party affiliated economist, and I was part of a small group, 5 economists with no political party ties, who were invited to work on the transition and the beginning of Lula's first government. There we were, and one precondition for that was exactly the lack of any party affiliation. There I was with Max Lisboa as Deputy Minister for Economic Policy, Joaquim Levy as Deputy Minister for the Treasury, George Rashid from the bureaucracy of tax, Bernarda P. As the overall deputy minister, and I was the guy responsible for international affairs. And the only reason why, at least I can say in my case, but I can't bet that it was also the other one of the other ones, was the commitment, the interest in exactly the explanation that the new government wanted to show the commitment to the triple axis of macroeconomic policy inherited from the previous government, namely fiscal responsibility, floating exchange rates, and respect to the inflation targeting regime. And it paid off. It paid off. Brazil, in a couple of years, obtained for the first time ever the investment grade. The country was able to benefit from the favorable commodity booms and so on, thing that would not happen if Lula had been crazy and adventurous. And well, then things went on later on. We had the global financial crisis, change of directions and so on. But my point is that there are some things that won't be touched. Even if some economists surrounding Lula talk about different forms of fiscal targeting and so on, the point is that everyone knows how fundamental it is for Brazil to keep at least a steady path of recovery of economic growth. Cannot do stupidities on the fiscal side. That regardless of whoever wins the election, despite the noise and so on. And the other point as well is that it's still very recent, and very clear in the memories, the high price paid by the country for the adventures during the particularly President Dilma's government with the new economic thinking or whatever, new economic matrix and so on, and which led to had as legacies simply higher public debt without accompanying private sector investments. So I don't think that even if Lula wins the election, there would be any kind of return to that kind of policies. I'm optimistic in that regard. But these are doubts that will only be dissipated as we will need time for that. 2022 is inevitably a transition year. But I'm deeply convinced that the lessons that the country has learned in the last 2 decades are strong enough to constrain, to limit the extent to which dramatic adventures might be pursued in 2023.
Well, that's very reassuring. We've certainly learned lessons over the past number of decades about stepping in the wrong direction and the consequences that we can reap as a result of that. It's going to be very interesting, of course, emerging from the pandemic itself, because clearly one of the indicators on which countries are going to be measured is the state of their fiscal health. And I wanted to get back to that because, of course, the ability to move forward on any kind of reform agenda can be quite constrained by the fiscal room, obviously, that we have. And of course, the need then for private sector involvement. Now, given the fiscal deterioration that we've seen on a fairly grand scale inside of this, I would imagine that all economies are grasping at private sector participation as a means of actually overcoming the fiscal straits that they have gotten themselves into. John, I'm going to go back to you, and based on your own presentation, what do you think, how do you think Brazil is situated in a world economy where, you know, I'm imagining that we get to the endemic stage of COVID-19, which some are saying we're fast approaching. Wall Street Journal article in the last week or so. and people start to turn back towards the fundamental realities of economies. One of the worries that we have at EDC is, okay, when the ratings agencies get back into the game of saying, okay, let's assess what has actually happened here, will particular emerging markets be the targets, the poster children of what ratings agencies want to do? I'm just wondering if you would feel comfortable commenting on Brazil's relative situation to other economies. And by the way, I will say that your chart there on debt to GDP makes me jealous as a Canadian, because according to the OECD, we're well north of Brazil's level there. So anyway, that's a rather lengthy question, but over to you.
United States too. I mean,
yes, absolutely.
It doesn't seem like there's any fiscal constraints here at the moment, although there will be, unfortunately. But I don't know if they want to make a poster child of any. You know, the people at the rating agencies know Brazil quite well now. That wasn't the case when I first came to Wall Street in the early 90s. But they really they know that these numbers are there, and they do look at numbers. They make some qualitative decisions, but I think there's other countries that are probably of more concern. Otaviano mentioned Colombia. Colombia's had, a similar kind of inflation recovery thing, but they have a very big trade deficit. They don't have, that's not necessarily bad, because sometimes that reflects investment flows, but the fact that their oil production and so forth is suffering quite significantly. And then you have these movements in Colombia and Chile to undo their pension systems. It's already started in Chile, unfortunately. Peru, not so much. So you're having, and then we go to Argentina. And now they are printing money hand over fist. They're expanding the fiscal, and they're using price and wage controls to try to control inflation, which is always kind of a recipe for disaster. So I think in relative terms, Brazil is doing very well, even as you said, with respect to the G7. The question, and Otaviano stressed this, and it's absolutely right. How long are they going to persist at this? How long can they ward things off? There's lots of news today about Otaviano mentioned the transfers. They're above. They would break maybe the spending ceiling. So it's going to be a constant struggle. And it's, we've seen 4 years of it actually, well, even before this administration. But I think when you look back, and I'll let Thiago comment on this, my own perception that Brazil's Congress, although they go into another fallacy of composition, individually they like doing naughty things, but as a group, they're fairly responsible when it comes to reform and the fiscal side. So I'll leave it at that, and hopefully I've provoked my colleagues enough to speak about it.
Well, I invite each of you to respond in turn. We are fast closing in on our time here, and I want to respect that, Carolina. But quick final comments, Thiago, and then after that, Otaviano, we give you the last word.
Well, what I want to comment is that it's very important for us to observe some of the variables that I mentioned in relation to next year for the investor to look at. I believe that the main point that we have a positive and a negative thing to observe in the next few years for an investor. One of the good positive things is that independent of who wins the election, they will be forced to deal with the same central bank, with the same president of the central bank, given the independency, the mandate that the president has. And this forces an administration to be better at long-term planning. Okay, so this is one thing. On the other hand, what we have to observe is that we have two different concepts between this administration and, let's say, potentially a Workers' Party administration, which is the participation of the state in sponsoring certain things. For the investor, it's good for the state to invest in certain areas, particularly if those investments are focused on public-private partnerships. On the other hand, for other investors, focusing only on public-private partnerships, as this administration is doing, is ideal, is even better. So those are two profiles, those are two types of mechanisms that can emerge in 2023 that will guide a lot of the investments, and that is important to look at. I will always keep my eyes open at infrastructure and infrastructure logistics above everything else, because there's a multitude of variations that can be done in terms of infrastructure logistics. And whether we have state participation or only private participation, this will be the most important focus to attract investments in Brazil that can actually bring very strong results for investors abroad.
Well, those are wise and encouraging comments. Thank you very much for that. Otaviano, we're going to pass it over to you for the last word.
Great, fantastic. Just 2 points, not to be so long. First, complementing what Thiago says, and I fully agree with him. When one breaks down the low levels of infrastructure investment to GDP that I mentioned before, there is a heterogeneity among sectors. The problem of lack of investment is particularly high in logistics and sanitation. It is less so the case in energy, even if our dependence on hydroelectricity now is showing to be somehow also full of risk. But the fact of the matter is that where the country mostly needs right away investments with the participation of the private sector inevitably is in logistics and sanitation. That's one point I would like to end. So look at those segments particularly. And with private sector participation and the plethora of joint investments combined to support that axis of investment. Second point that I would like to make is the following. Some colleagues and I, over the years, I must confess that we tried to mimic ratings by agencies by developing some quantitative models, macroeconomic models. And I can tell you that, at least as far as I remember, the track record of our models were pretty accurate, at least to measure the so-called ability to pay component of ratings by agencies. The willingness to pay is another story, but the fact of the matter is that our model performed quite well. And it had to do with a set of macroeconomic variables. And let's say, looking at the profile of those macroeconomic variables that John presented, I am optimistic, provided that, of course, the fiscal rules are maintained. I'm optimistic with respect to the evolution of the country premium risk in case of Brazil. The underlying evolution of both the balance of payments configuration plus if the fiscal path is maintained overall, that bodes well for the rating side, rating component of the Brazil investment in Brazil. Thank you.
Well, thank you, Otaviano, and thank you to the panel for great insights here. And I'm sure that from what the three of you have shared with us, the investors, at least around the table, are quite reassured by the comments that have been made. I will say that for everybody's edification, there were questions that came in through the chat, but it was a bit of a back channel. And before I could actually get to those questions, they were answered inside of the chat. And so that was an interesting interplay that was going on. And I certainly hope that you have made yourselves or availed yourselves of those question and answers that have happened there. So I want to thank each of the panelists for taking the time to be with us today and sharing your sage advice for all that are around the table. And Carolina, thank you for putting this all together. And I want to pass it back to you now to close off.
Thank you so much, Peter, and like Otaviano, John, Thiago. This was like really incredible. I could like hear you guys speaking, I think like for another hour at least. So time flew by. Thank you very much. Lots of insights. And it's interesting because the session tomorrow, and I'm gonna, before I invite our other Peter Hawkins for the closing remarks, I just wanted to point it out there that this is the first session of a 3-session event. Tomorrow, we will talk a little bit about why Brazil, right? Like the trends and opportunities. And I think that there will be a lot of touch points on technology, infrastructure, logistics, sanitation, and all that Canadian technology that can take advantage of the Canadian investments in Brazil. As Ambassador mentioned before, there's a lot of Canadian investments going into Brazil right now on infrastructure and energy and different sectors. And I think this will help plug in the Canadian suppliers into those projects as well and help them to find those opportunities. And then for the companies that are here today with us too, the third session then is how do I enter the country, right? So the practical steps, we have a bunch of very interesting presentations on tips on really how to make your way into Brazil and how to find the opportunities and enter the market properly. So I look forward to seeing you all there. Once again, Otaviano, John, Thiago, and Peter, thank you very much for availability to be here with us today. I'd like to thank again the Deputy Minister, Carlos da Costa, for his availability, for his incredible presentation as well. I think that was very clarifying on all the good work that the ministry is doing. I'm glad that you're able to stay here with us for this. And I'll invite everyone to keep your cameras on, and I'd like to invite Peter Hawkins, that is the Managing Director at Mellowhawk Logistics, as well as the co-chair of the Brazil-Canada Chamber of Commerce, to say a few words as well. Peter.
Carolina, thank you so much. I'm very, very pleased to be doing this. And man, that was actually a very exciting series of commentaries from everybody. I don't know if people really realize how valuable the insights we're hearing here. And what I love was, you may not have noticed, they actually disagreed on some things, and everybody was so gracious about it that I thought, wow, okay, did he really say that? Maybe yes, maybe no. So I am very, very pleased to see this. Anyway, I do want to express my gratitude for all these esteemed speakers who joined us, from Ambassador Borio to Paola Saad, our former president and chair of the Trade and Investment Committee, to Dr. Carlos da Costa. Thank you so much, Deputy Minister, for your insight. And I got to tell you, you made everything very, very accessible and exciting to potential investors. So I take my hat off to you for doing that, because I love the fact that you mix facts and some real sales. So good for you. That never happens in government. Thank you. And of course, Peter Hall. Peter Hall is a god when it comes to his weekly commentaries. I read them every time. I'm an EDC client and I love EDC. And but Peter has a lot of insight and is really worth following. So I encourage everyone to do that. And of course, Dr. Otaviano Canuto, your insight is always interesting. And what I also like about is that you don't mind playing the underdog, even though you're the overdog all the time. So I think that's very nice to see, and thank you for that. And of course, I want to also thank Thiago Aragao. Thiago, I think I want to hear more from you down the road too, because I've been reading some of your articles, especially some of your stuff with Ryan Berg, and I think you've got an awful lot to say, because you touch some topics that a lot of people don't touch, and you're able to bring them to all of us. So I really appreciate that. Thank you. And John, of course, you are, a god to us, and so thank you so much for your insight and for, you're setting the stage for everybody. So I just want to express my thanks to everyone. I also want to remind everybody listening that we are, of course, the Chamber of Commerce, and we're always looking for members, and we're looking for people to understand that by joining us and joining with us, you can really see some insightful commentary, but also some insightful networking. We will make it available for you to meet very important, valuable thought leaders like these people here, and these are thought leaders on a global scale. So this is a chance for you to access them, but you don't play if you don't pay. So of course we do want you to be members. Anyway, Carolina is our CEO, and I'm very grateful for you, Carolina, for organizing this with your team, with Marianne and everybody else. So thank you. And I'll keep it short because, of course, people have work to do. But thank you all. Very grateful. Looking forward to tomorrow.
Thank you, Peter. Thank you for your words. As always, a pleasure to have you here with us. To finish, so just a reminder again, we have a second session tomorrow starting at the same time, 2 p.m. EST, 3 p.m. Brazil time, to talk about then why Brazil, trends and opportunities for Canadian SMEs. So if you're a Canadian company with us and you're looking into exploring your opportunities in Brazil, looking to enter the market, you cannot miss it. We have among speakers, of course, Elise Racicot, the Senior Trade Commissioner at the Global Affairs Canada in São Paulo. Panel will be moderated by Frederico Marques, who is the head North America for Cisco Barrier, and also one of our directors, with the participation of Roberto Haddad from KPMG Brazil, and Daniela Tavares from Vela Software, a Canadian company that is in Brazil right now, so we cannot miss it. We also have a very special keynote from Ambassador Jennifer May, the Ambassador of Canada to Brazil. So you have to be there. We look forward to seeing you there. And again, thank you for all the panelists for your availability. And of course, I cannot end this without thanking our sponsors that makes all of this possible. So our platinum sponsors, Vale and Melahawk Logistics. Thank you, Peter, for the support, as well as Export Development Canada. Thank you, the other Peter, Sescon Barrier, Brookfield Lending Mining, and the TMX Group for the partnership. Thank you so much. Stay safe. And I look forward to see you all guys, hopefully in person next year. So thank you, everyone. And I'll see you tomorrow.